that. And they had come across I Am Academy, this company that promised them that within a few months, they could really become multimillionaires. They could earn a passive income if they just knew the right strategy to trade online. You know, this company had the recipe for them. So yeah, I started digging into it and found out that France was just one of the many, many countries that this New York-based company had expanded in, and was making a lot of victims, essentially.
Well, and I want to get into the size and scope in terms of how many got impacted, but tell me like how it works. I mean, I've kind of read through here, so I have an idea, but tell our world how this company worked, how it said, okay, you're going to make money, and you know, what was involved in terms of becoming a member and what you had to kind of give across, because you had to pay a fee, right, to be a part of this.
Yeah, so initially it worked like any subscription to an online product. It's like an online educational platform. So you paid $250 to join, and then you'd have to pay $250 every month to keep having access to this online platform. And on the platform, you'd get sort of pre-recorded videos of so-called I Am educators that would teach you the basics of markets. You know, how do you make a stop loss? How do you figure out a difference in percentage points, and how do you take advantage of that? And then they also said, well, they have this amazing algorithm that charts prices of currencies and stocks and any financial product. And this algorithm can sort of tell you when a price is going to go up or going to go down. And so if you just pay the subscription, you'll have access to all that information, and you can really quite quickly earn money by using that trading advice and learning how to read those graphs.
I feel like a lot of folks in the financial community would be like, wait a minute, like what is this algorithm? And it almost sounds too good to be true. Tell us about that. They targeted really a younger generation. How did they do that? I mean, it sounds like, I was looking through it, it almost sounds like there were influencers on there about like, look at all the money you can make here.
Absolutely. So at the end of the day, the software that they promoted, the algorithm, doesn't work. It's very basic. It's not really predictive. But they really lured people in through the lifestyle that you could have once you get those millions. And they did that on social media. And essentially, the CEO of the company hired these really muscular, energetic salesmen that went on Instagram and showed their lives on a Dubai yacht or at a 5-star villa in Italy, saying, "Look, I'm this rich. You want to be like me? Well, why don't you just join I Am? And this is the recipe for success, essentially." So that's really how they attracted people that way.
Who's behind it all? Tell us a little bit about the company's CEO and how he did in all of this.
Yeah, so Chris Terry is a man who was born in the Bronx, and he started working in construction. He had the construction company had ties to a mob family, and he had to pay a fine. He was like implicated in a criminal conspiracy. So that's where he started, and he likes to mention his mob background quite often. But then he went on to Amway and was a salesman for another multi-level marketing company. And then after that, he tried to build a reputation of himself as a trader, saying he was managing hedge funds and he knew all about financial markets. But really, he was never a financial broker. He has no financial real accreditation from any real U.S. institution. And he's made very well for himself. So he's definitely a multimillionaire. I Am at its height in the pandemic was selling the equivalent of $500 to $600 million in subscriptions.
Wow.
For the year. And he flies around in his private jet and has a bunch of condos around the world, in Dubai, in Las Vegas, in New York. So he's making a lot of money from all this.
Tell us about, so he made a lot of money, but tell us about some of the individuals who paid, who got a part of the platform, did some of the trading, some of these young individuals, some really sad stories in terms of what happened to them. They lost a lot.
Yeah, so people would come in thinking, I'm going to learn all about retail trading, make a lot of money. And what happens is not only do they pay the subscription, but often they start trading and kind of gambling their money away using strategies that don't work. So pretty quickly, they'll have a lot of losses. But what I Am educators will tell them then is, well, there's this other side of the business. You can earn a commission if you sell subscriptions to other members. And so that's the multi-level marketing aspect of
Mm-hmm.
it. And so where it gets a bit tricky and where people feel like they can't leave the company and they end up losing way more than just like a regular, financial service, is that these teenagers end up really kind of being gaslit and a little bit sort of brainwashed into believing that, it's their life's purpose to be in this company. They have to keep trying to recruit. They have to keep bringing in more people. If they're failing, it's their fault. So there's this whole strategy to keep people involved, to keep people selling more subscriptions to others, even when they realize the trading lessons are really basic and not helpful at all.
It does sound like, and I know you get into this, I mean, it's prime for regulators, it feels like, to take a look. Alice, where are we on that front? Because it sounds like this, has to be on their radar.
Absolutely. So, I mean, across Europe, a bunch of investigations are open at the moment, but nothing has really happened so far. And then the biggest investigation that's ongoing right now is by the FTC in the US that is looking at IM Academy. They're reviewing complaints. They're talking to the CEO, and well, it looks like there might be in discussions to kind of try to put an end to this company's activities. But to be honest with you, Carol, there's not that many regulations around multi-level marketing companies or these kinds of financial education platforms. So they might just go on. They might just like filter through all these regulations and come kind of. They might pay a fine and just get on with their business.
Yeah, I do wonder on something like this. I mean, is it kind of eyes wide open if you're going to pay money, like you have to kind of know what you're getting into? Or is it a case of, is there a way of proving, and I'm not saying there is, but, fraud of some sort in promising an algorithm that's going to kind of do everything? Or do we all just kind of know that maybe if it sounds too good to be true, it's not going to be true?
Well, yes, they can be liable for making false income claims.
Mm-hmm.
So early on, they would have people on Instagram posting like pictures of their Rolexes and bills and saying, I make 10 grand a month in passive earning and passive income. So those kinds of figures can really put the company in difficulty because you're not allowed to make these claims unless you can back them up. And in this case, they can't. Yeah. So that's one area that's problematic. The other one is that they say they don't give financial advice, but really they kind of do, and they almost trade for the people that are part of the company. It's kind of tricky, but they usually just tell them which brokers to go with. They used to mirror trades automatically, so just like copy and paste trades from traders and give it to Alice, the members.
I have to ask you, I only got about 30 seconds, so just quickly, company is still active?
Yes, it is still active. I was just at a conference there in Budapest that they had a huge company rally a few months ago. So they're still active and doing well.
I got to say, you paint such incredible pictures in this story. I feel like it's like a mini documentary just waiting to happen. But it sounds like the story's still to be played out here. So we'll continue to follow any updates. So glad we could get some time with you to kind of spell it out for us. As we said, it's among the most read stories on the Bloomberg today. Alice Cantor, she's Bloomberg News personal finance reporter, joining us from London. And as we said, among the most read, and you can check it out, it is also going to be in the new issue of Bloomberg Business Week that's coming out later on this week. And it's also already on the Bloomberg. Coming up next, we talk a little bit about the workspace, freelance workers. There are a lot out there.
8:21 on Wall Street. We do check markets all day long here at Bloomberg. Best level of the day right now, 39 minutes to go ahead of the closing bell. S&P up 25, up 0.5%. The Dow right now up 158 points, up 0.4. NASDAQ up 128, up by 0.8%. A rally in the world's largest tech companies driving stocks higher. Traders are awaiting inflation data tomorrow morning for clues on the Fed's next steps. 10-year, 4.44% with a 2-year that's now yielding 4.81%. Spot gold is up $19 the ounce, up 0.8%. West Texas Intermediate crude up 1.4% right now, 78.04 a barrel. So what about the overall market backdrop? Emily Rowland is Co-Chief Investment Officer at JH Investments.
Markets are starting to trade like we're in stagflation. We're seeing areas like defensive equities and value stocks catching up to tech and communication services. That's where the best earnings have been. But we're seeing this rotation starting to play out as stagflation becomes a bigger theme.
Emily Rowland of JH Investments. Meme stock traders again piling into names, including GameStop and AMC Entertainment Holdings. GameStop up now by 47%. AMC Entertainment up 19.1%. Also rallying today among those meme names, Tupperware up now by 11.1%. Again, recapping stocks higher. S&P up 28, up 0.5%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
The meme stock trade is on. All right, Charlie, thank you so much. A few headlines I just wanted to mention in the last 24 hours or so. Converse cutting jobs as part of parent Nike's cost savings plan. Walmart axing hundreds of corporate jobs and asking most remote workers to return to offices, according to a person familiar with the matter. And Fed Chair Jay Powell earlier today weighing in from Amsterdam in a moderated conversation, saying there are signs of gradual cooling and rebalancing in the U.S. labor market, and yet, at the same time, how the U.S. is still experiencing labor shortage in many industries. All right, so we wanted to talk a little bit more about what's going on in the workforce. So we welcome back Kelly Monahan. She's Managing Director of the Employment Upwork Research Institute, which is a division of the publicly held online recruitment and marketplace company Upwork. She joins us from Florida. Kelly, great to have you back with us. How are you?
I'm doing great. Thanks for having me.
Well, it's great to have you here. You guys have some new research on Gen Z. Those was born, I guess, was it the late 1990s, early 2010, some 20% of our population. Why, first of all, did you focus on this group in particular?
Yeah, that's a great question. The reason why we zoomed in on Gen Z was two reasons. The first is at the end of this year, they're going to actually overtake, in terms of percentage of workforce, the baby boomers. So just by their sheer size, it's important we understand where they're coming into the workforce. And it's also graduation season. And so we wanted to also help Gen Zers navigate the new world of work they find themselves entering.
I got to say, walking in and around New York City, there's a lot of universities, a lot of Columbia grads getting ready for graduation ceremonies. So it was interesting to walk around. So you guys did some research into this group. So what are first of all, let's start big and broad. What are the big findings that you guys came up with?
Yeah, the biggest finding, I think, is actually a big wake-up call for leaders today. And what Gen Z told us in our research is that they want to work differently than the typical employment model is today. Our most highly skilled and highly educated freelancers are wanting to be entrepreneurs, and they're actually finding a more stable career path towards managing a portfolio of freelance projects, as an example, in order to diversify their project work and diversify their income. As we think about all the things that Gen Z has grown up in, an unstable economy, the pandemic, they're really looking to take much more control and individualize their work. And so that, to me, is a big wake-up call to leaders today to think through Gen Z signaling to us that the way that we've structured work is broken to them. They want more control and flexibility over the way they're working today.
Kelly, do they really, really, really want it, or is it just kind of what's coming to them? And I ask that because, I mean, I get it. I'm in the media world. I've seen lots of freelance work, and I think some do really like it, but many are still seeking out kind of that full-time gig. I mean, do they really want this to be so many different, maybe smaller jobs, if you will, that kind of add up to a whole?
That's such a great question. And here's what we're finding within the data. Those that have a post-grad degree are the ones that are actually more likely to be structuring work this way. And I think the reason is what they really, really want, to answer the question, is flexibility. And I think, as we think through the RTO headlines that are coming back, the layoffs that have occurred, especially within the tech industry, I'm going to be honest with you, I think it's spooked this generation a bit. And they're realizing that traditional contract with one employer being tethered to one organization can't get them to where they want to go fast enough, and especially given the economic conditions they're growing up in, the cost to buy a house, the cost to buy a car, groceries, all of this is so much more expensive. And so again, those that are highly educated and can really write their own ticket, having the right skill sets that are in demand, we see in our data set are actually opting towards, again, these aren't going to be your short, typical gig type projects. So these aren't going to be the people necessarily driving an Uber car or doing DoorDash. These are the people who are going to come in and are tackling machine learning or data science or your content creators and working on longer term complex projects that, quite frankly, as an early career professional walking into corporate America, they might not have the opportunity to do.
Because I do wonder too, and just, indulge me for a moment. Like I do think I watch,
Sure.
Kind of the younger nieces and nephews in my world, and just, like the flexibility, but then they get married and they have kids and then they become very 9 to 5 and they have to buy a house. And so they want the benefits, the healthcare. Because I do think about that part of, when you are piecing together freelance work, you don't have all the amenities that you might get from a full-time job.
I think this is such a great question you have. And really, I'm calling this like the Gen Z paradox that we're seeing, because you're right. I think there's the reality of the macroeconomic conditions we're facing today that are requiring a really need for income and to get it faster and to get promoted faster. And so there's these expectations of wanting more because of this. And yet there's a strong demand and desire for autonomy and flexibility. And when you can craft both of those things, I think that's the best of both worlds. You are absolutely correct, though. That I think the reality that many are struggling with and the paradox they find themselves facing is, what one do they have to choose? And again, where they are right now, they're younger in their careers, and we see this across many generations. You're willing to take risks. You're able to try to think about entrepreneurship because you're at that right life stage to do so. The more that you age, and to your point, the more responsibilities and, quite frankly, the costs you incur, I think Gen Z is trying to weigh out, how long is it going to take me to climb that corporate ladder? Do I have enough stability? Am I going to end up getting laid off? Is this the safer route to actually diversify? And I think those are questions that we're seeing played out in real time today by this generation.
All right. So then is there a message to corporate America? You're saying, hey, folks, this is what's happening with the current workforce. You better wake up, especially when, what did I talk about? Walmart saying, hey, folks, we want you back at the office.
Yeah, I found that so actually fascinating as I was listening to you opening up this segment. So I think this is a big wake-up call for corporate America today. We know, the idea of work feeling broken, and that, we see the stats all the time that Gallup reports on. Employee engagement is not off the charts. It's low. Most people are struggling today. And so there's something systematically broken about the way that we've structured work today in the age of AI, in the age of distributed work. We have all these new technologies that I think are causing workers to think differently because they're behaving differently as customers. And yet it's harder for us to move our organizational practices, our systems and technologies that we built around, that is much more centered around this long-term employment contract. The reality is that's not the way the world's working today. Customers are demanding much more speed and convenience. And because of that, that's really disrupted the entire way leaders are thinking about work. And so the wake-up call is, you can't continue to do business as usual. If your plan is to attract and retrain Gen Z talent by doing what you're doing today, I'm going to be honest with you, there's not enough Gen Zers coming up the ranks. Baby boomers are retiring at faster rates. In some industries, it's 5-to-1 ratio where baby boomers are leaving to every one Gen Zer. So we've got to wake up. We've got to figure out how to make work for the majority of people today. And I think that requires some deep systematic change.
Is there anything, though, I'm going to throw out artificial intelligence, and anybody who's smart talks about it and says we're very early in terms of the impact it's going to have on the workforce. Although, having said that, there are folks out there that are already saying we're a little worried about the jobs that are going to be taken or replaced by Gen AI, machine learning, and so on. Gen Z, in terms of how they approach AI, anything constructive that you guys are coming up with yet?
Yeah, it's a great question. So one big thing that I'm seeing that's a behavior change in Gen Z compared to other generations is they are adopting this technology much faster than other cohorts. And they're doing so in two ways. One is that they are self-directed their learning. Because they're digitally native cohort, they're not afraid to take these online courses. They're not afraid to actually learn through online mechanisms. And so they're embracing this and are much more likely to have a certificate today in AI as an example. But here's the other thing, and this is what I actually think is so interesting. They're much more willing to go for coaching and advice to systems like ChatGPT. So these large language models, they're a bit more organic and inherent in the way that they're interacting with them to get advice. Gen Z in particular hates inefficiency. And so their ability to actually utilize these tools to work faster is really mind-blowing to me. And so I do think this generation is going to help us shape what this world of work is going to look like in an age of AI. I think the message is like, if you're not Gen Z, we got to play catch up. The rest of our older generations.
I do want to be smart, because I know I always get emails like after I have a conversation like this, and they say, well, wait a minute. Like, you look at a lot of the pandemic darling stocks, kind of funny that we're talking about meme stocks today, but you saw like such an uptick in things that benefited because we were shut down, people were laid off, there were just things we did differently. Small businesses were being created. Are we kind of, though, in terms of people with freelance, generally speaking, or doing it on their own, kind of getting back more to 2019 levels? And forgive me, I've only got about 30 seconds. Got to be quick.
There's no problem. Yeah, no worries. So absolutely the pandemic has accelerated this, but I will tell you from our research, Gen Z, who's doing this from a full-time basis, have been doing it for 2+ years. So I do think there's a trend that we've got to watch out for. I do think this is going to be much more mainstream and not just a pandemic blip.
All right, we're going to leave it on that note. Kelly, great to get some time with you. Dr. Kelly Monahan, she's Managing Director of Upwork Research Institute, joining us from Florida. And still got a few weeks before we get our next monthly read on the labor market, but something to think about, especially when it comes to kind of a younger generation. Having said that, quick check on the markets, if I may, because we are seeing ourselves just around our best levels of the session. What does it mean? We're up just shy of 0.5% on the S&P 500. NASDAQ 100, though, an outperformer. They're up about 0.7%. Hey, coming up next, Michael Riley, co-head of markets at Wells Fargo Corporate Investment Bank, on the feel for deals in today's environment and on taking care of those Americans who take care of us. We're going to continue that conversation. First up, though, World and National News and Amy Morris. Amy.
All right, thank you, Carol. Prosecutors in Donald Trump's criminal hush money trial say Michael Cohen is the last witness for the government, which means the government will likely rest its case on Thursday. The defense's cross-examination of Cohen got off to a combative start as Trump's attorney tried to show Cohen as a felon and a liar motivated by revenge. Meanwhile, a New York state court upheld the gag order restricting Trump from speaking publicly about those involved in the trial. A federal judge in Delaware has denied a request by Hunter Biden's lawyers to delay his federal gun trial set for next month. Biden's attorneys wanted a delay until September to give them time to line up witnesses and go through the evidence handed over by prosecutors. President Biden's son is accused of lying about his drug use in 2018 on a form so he could buy a gun that he kept for about 11 days. President Biden's plan to hike tariffs on a broad range of Chinese imports take a nuanced approach to solar equipment from the country. While tariffs on solar cells and modules from China will double, the administration wants to exclude some equipment from the duties altogether to help save costs for building American factories. President Biden explains how China was able to flood the market.
China heavily subsidized all these products, pushing Chinese companies to produce far more than the rest of the world can absorb, and then dumping the excess products onto the market at unfairly low prices.
China, meanwhile, is blasting the administration for the move, vowing to take its own action without giving any specifics. A bus carrying farm workers in central Florida has overturned. It happened this morning. 8 people were killed. 40 other passengers were injured. Police say the bus was transporting 53 migrant workers when it collided with a truck north of Orlando. Those workers were being transported to a local farm to harvest watermelons. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
3:40 on Wall Street. We do check markets all day long here at Bloomberg. This update brought to you by Mass Mutual, a leader in wealth management, offering financial advisors the best of both worlds with resources to help you run your business and the freedom to run it your way. Learn more at massmutual.com/wealth. Stocks are close to session highs. Meme stocks ripping higher. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks with an afternoon bid today, with the Dow currently up 125 points. S&Ps are up 24, while NASDAQ rises by 0.8%. The U.S. 10-year yield at 4.45%. Gold is higher by 19. Oil trading in the red, and Bitcoin, it's down by 2.5%. Among the main 11 S&P sectors, leaders were tech and real estate. Only consumer staples and energy were in the red. And leaders to the upside in the Dow, Intel and Boeing, while Coca-Cola led to the downside. After earnings, Home Depot was little changed. And in the tech space, Oracle spiked intraday on a report xAI nears a $10 billion deal to rent Oracle's AI servers. In other news, GameStop soared as much as 113% before parent gains. And wrapping things up, JP Morgan trades to an all-time high. Live from the first breaking news desk, I'm Bill Maloney. Charlie.
Okay, we thank you very much, Bill Maloney. To hear live breaking news over your Bloomberg, type SQUAWK, SQUA, on your Bloomberg terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
You drive me crazy.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, just got about just under 18 minutes left in today's trading session. Let's get to it. Our Drive to the Close guest, a special guest, Michael Riley, co-head of markets at Wells Fargo Corporate and Investment Bank, here in our Bloomberg Interactive Broker Studio. Also participating in the Wells Fargo Military Appreciation event here at Bloomberg headquarters today. Michael, by the way, a decorated officer in the Navy, where he served aboard the nuclear submarine USS Memphis, yes, USS Memphis. Let me try if I can say that again. USS Memphis. Welcome. Thank you for being with us.
Yeah, thanks for having me.
I think my brother was on the Abraham Lincoln. We were talking before we got started because he was also in the Navy. I want to ask you, I feel like there's a million places I want to go, but I want to ask you about being in the Navy, what you learned, and how that kind of translated to being in the financial industry.
Yeah, I mean, it's a good question. I get that question a lot, especially from veterans as they're trying to transition out, because they don't necessarily know as much about the financial industry as they would if they had gone through school.
Did you go like?
I had an undergraduate business degree, but I was also a chemical engineer, right? So ultimately, I was an engineer. So I didn't really know that much about it either. Just from talking to people and networking, right? I think and you asked the question to answer your question in terms of what I learned. I mean, certainly perseverance is one thing, right? And personal responsibility around things. I think being in the military, you're thrown into a role of responsibility much faster than most people coming out of directly out of college, right? So when I came out of college, I was put on a nuclear submarine, basically to run a nuclear reactor 500 feet underwater, right? So
not too much pressure, not too much responsibility.
Yeah, so not many people have had that experience. I mean, certainly some, but it was something. It was a life experience that a lot of people will never get to experience.
Well, and I think about kind of what you're doing, markets, and I feel like this environment, the M&A environment, right? I mean, it's a tricky one. I think people are trying to figure the way forward. You were just at Milken. We were talking a little bit about it. I was at Milken. It felt like that there was a lot more optimism than we've seen certainly the last 2 years. How do you see the macro environment right now?
Yeah, I mean, look, there certainly is a lot of optimism, right? I think that people have already started to look forward towards the rate cuts. I think part of the problem is they've been looking forward for a year now.
Is that a mistake in your view?
I think it has been historically, but I mean, it's worked so far, and hopefully things will kind of coast in, over the next 6-ish to 9 months. I mean, now the speculation is, at least probability would say that the next cut would probably be, or the first cut would probably be sometime at the September meeting. I mean, that's our view as a House, but we'll see.
But we get CPI tomorrow, and then we get.
Yeah, I mean, our view was that we would cut in June too. So, like, I mean, it just keeps getting pushed out. I think there's just too much uncertainty around conflicting inflationary data versus jobs data. Right?
Does it matter? Like, I think about in your markets group, right? You guys are up about 37% year over year in the last earnings report, markets division in general. You also saw gains in investment banking, the trading market space as well. I mean, volatility, like traders love volatility. That's a good thing, and you anticipate that continues?
I do. So we were up 37% last year versus the year before. This year, we're kind of on par for where we were last year, so it's not really a huge gain. But I mean, certainly volatility helps. There was a lot of volatility, especially in the beginning of last year, when it came to the regional bank issues that we had. And my expectation is there will be volatility into the second half of the year. What we've really seen so far this year is a very robust issuance calendar, especially on the debt side. And the speculation is a lot of that is just stuff being pulled forward, because as you get closer and closer to the election, the uncertainty around that certainly will cause market volatility, but it also causes uncertainty. So, corporates want to get their funding out of the way now and try to roll all that forward. At least that's the expectation.
But a sign of a healthy market that they're doing that and being able to do that.
Yes. Oh, it's very healthy. I mean, yeah, and part of it is, companies that are coming right now, right, certainly, are in a pretty stable, cash flow standpoint. Right. But for the most part, deals are getting done.
What do you make, Michael, though, of the M&A environment? $5.2 trillion in 2021, that was the peak. Is that the outlier, or I don't know? How do you see it right now?
I think, well, it's super positive. There's a lot of conversations happening from what we're hearing.
Yeah.
I think there is a little bit of uncertainty from a regulatory standpoint. There's been some deals that have been kind of, haven't gone so well based on that. But I think there's a lot of optimism around M&A. I do.
Is it mostly because of what's coming out of private equity in terms of needing to either do some exits, but also having a lot of cash still to put to work?
Yes, absolutely. There is a ton of cash.
Is it just the private equity part that maybe is fueling it?
I think that's part of what's keeping things moving, but it's not just private equity, right? It's companies that have, strong cash positions that want to increase their business.
What's the biggest risk? What's the biggest thing that when you guys look at the outlook here? Because I do feel like, depending on the day, depending on what either Fed speak or an economic data point, or that for the most part is what kind of makes, we see some movement in the markets.
Yeah. Look, that's what's causing the market to move, and everybody is, tied to the edge of their seat when it comes to things like CPI and data as it comes out, trying to speculate on the Fed. But I mean, it's pretty well telegraphed, right? Like, we know months ahead of time, or we think we'll know months ahead of time when things are going to happen. I think the biggest risk is, and I mean, we saw it, happen, although the market didn't really react the way I would have expected them to react. But geopolitics has been a big issue, and it's quieted down a lot. That doesn't mean it's going to stay quiet. I think my personal opinion is that's the biggest risk, is something that we're not expecting from a geopolitical standpoint, and starts to, change the environment out there.
Which is pretty remarkable if you think of the last 2 years, right?
Absolutely.
That has certainly hit us hard, and we're not done yet in terms of those two specific events, whether it's Ukraine and Russia or what's going on in the Middle East. You guys are here at Bloomberg headquarters doing this military appreciation event. I've had a great conversation with John Weiss of Wells Fargo about it. But when you think about veterans and the things that they need and the importance of making, providing for them, whether it's mental health, whether it's needing a home. I mean, how do you think about it, and what's so important about it?
Yeah, look, I think when you really dig into it, veterans, right, have spent a period of time, a significant period of their time, right, basically serving their country, right? And it's not just the veterans, it's veterans' families, right? I tell people all the time, my wife actually had the hard job, right? Because I was on a nuclear submarine. My wife had a 1.5-year-old and a 6-month-old when I went on a 6-month deployment, right? So, so it's transitioning out of the military, not just for veterans, but for veteran families, right? And making sure that we support them, because it's difficult. And the military is really good at some things. Transitioning people out, once they're off the government payroll, they kind of become not really the government's responsibility anymore, right? So it's really up to us to kind of pick that up, right? Whether it's, foundations and charitable contributions, et cetera, that's great, right? And I think, and Wells Fargo specifically does a lot of that, right? But for me, it's actually more important around the employment and the education process, so that that, you can take veterans who are very proud people in general, right? You get them and you teach them the ability to actually, get a job, work and support their family, et cetera, at a high level. And I think we've come a long way in the last 20 years, but we still have a lot of work to do.
Agreed. And it was interesting what you said about families. I've seen a lot of things too about whether it's PTSD and the impact. It's not only the soldier who is overseas, but it's also their families who have to live with it. Michael, thank you so much. And thanks for sharing it with our audience. Michael Riley, he's co-head of markets at Wells Fargo Corporate and Investment Bank, joining us here in studio. You are listening and watching Bloomberg Business Week.
Company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. 7 minutes to go ahead of the closing bell. Meme stocks pushing higher. Traders once again piling into the likes of GameStop, AMC Entertainment, Tupperware, a day after they soared in a revival of the retail frenzy. Right now, we have got shares of GameStop. They are surging now. GameStop shares, they are up by 58%. AMC Entertainment up 27%. Tupperware right now up by 14.5%. Some of the other stories that we're following: Amazon's cloud computing division chief Adam Selipsky stepping down, making way for Matt Garman, the unit's top sales and marketing executive. Amazon CEO Andy Jassy announcing the change in an email to employees. Anurag Rana is a senior tech analyst with Bloomberg Intelligence.
From our side, it's not going to disrupt anything that's happening in AWS. Andy's still running the company. And this new gentleman, Matt Garman, it looks like he's very focused on sales and marketing, global services. So, we anticipate a lot more focus on legacy enterprises and cloud migrations, from him.
Bloomberg's Anurag Rana, the cloud division accounts for most of Amazon's profit. It posted the strongest sales growth in a year last quarter. Oracle shares are advancing today after the information reported that Elon Musk's XAI artificial intelligence startup is near a deal to rent the company's AI servers. Right now, we've got Oracle up by 3.9%. And Boeing delivered 24 commercial jets in April, its lowest monthly tally since February of 2022. Those are our top company stories. I'm Charlie Pellet, and this is Bloomberg.
This is Bloomberg Business Week with Carol Massar and Tim Stenevec on Bloomberg Radio and Television.
All right, everybody, in just a few minutes, we're going to head over to our TV colleagues and count you down to the close on this Tuesday. In the meantime, we wanted to bring you one of the most read stories on the Bloomberg. It was some comments from Ken Griffin. You know him, of course, of Citadel. He was at the Qatar Economic Forum today earlier. Griffin talking about a lot with our own Eric Schatzker, including politics. And Griffin, you know, one of the most prolific supporters of Republicans across the United States. Eric asking him about whether or not he has donated to Donald Trump's campaign.
I have not. Will you? I'm going to wait to see who he picks as his VP candidate.
Is there anyone whom you'd like to see him pick as his VP candidate?
I don't. This is, again, like poking the bear. Not sure which way my recommendation goes in terms of helping that person's prospects.
All right, that, of course, again, was Ken Griffin talking with Bloomberg's Eric Schatzker at the Qatar Economic Forum earlier today. Interesting, though, he also declined to say who he'd like to see Donald Trump have as a running mate. So, you know, kind of not necessarily picking a name for that. We know that Donald Trump has been parading, I guess is a safe word to say, various folks down to Mar-a-Lago to maybe think about different individuals who might be good on the ticket, if you will. That interview, by the way, with Ken Griffin, wide-ranging. He was critical, slammed is the word we used here at Bloomberg, President Joe Biden's economic policies as incoherent, though he noted that neither Trump nor Biden are likely to reduce U.S. federal spending. That's a key impediment to reducing the rate of inflation in the United States, he said. And we know that that has become a bigger topic of discussion. It was certainly at Milk and a lot of people bringing up the United States government, their balance sheet, in particular the IMF in the spring meetings, also citing some concerns about that and the ability to deal with that, and also the higher costs of paying the debt on that and the debt servicing, if you will. So really interesting. That comment, though, and other comments from Ken Griffin, as you know, CEO of Citadel, $63 billion in assets under management. So he sees a lot when it comes to the market environment also overall. He also did found Citadel Securities, which is the global market making business. So check it out. You can find it at Bloomberg.com or on the Bloomberg terminal. All right, folks, just about 3.5 minutes, actually 2.5 minutes to go in the trading session. We're looking at an equity market where we are pretty much at our best levels of the session. Little moves, though, overall as we get ready for tomorrow's CPI print, but the NASDAQ 100 really some outperformance there. Time to head over to our TV colleagues. Beyond the Bell starts right now.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Alex Steele. We're counting you down to the closing bell. And here to help take us beyond the bell. It's a global simulcast. Scarlet Fu joining us here in the TV studio. Carol Massar, all alone. Apparently, Tim Stenevec got fed up with her. So Carol is going to have to do all the heavy lifting today.
Nobody wanted to play with me today.
And he's missing out here, Carol. This is a pretty good day in the markets. We've been talking about the S&P flirting with another record high, but really just an overall embrace right now of risk assets, something that we hadn't really seen over the past couple of months.
Kind of interesting, I feel like, the last hour and a half to see investors kind of coming in and bidding up this market on the equity side of things. I'm looking at something like the SOX, the semiconductor index, really some outperformance there, Scarlett. Scarlett, up 1.7%. Wells Fargo increasing its price target on NVIDIA today to $11.50 a share from $9.70. So giving some momentum certainly to that space today.
Yeah, but it's really a waiting game until tomorrow's CPI. And in the meantime, the big movers, again, come from those meme stocks, whether it's GameStop, whether it's AMC, whether it's anything else, Hertz, you name it.
Yeah, and that's why the NASDAQ is outperforming in terms of, well, actually the equity price, and also in terms of volume, too. That's a meme stock story. And something I was bringing up with Mark Lucchini of Janney Montgomery Scott is, if the meme mania is here again, can financial conditions actually be tight enough for the Fed to cut?
Also interesting, too, to see some of the big bids that we're seeing in a lot of, I guess, those sort of energy-related stocks. We were talking about Plug Power a little bit earlier. Enphase getting a nice bid. You're seeing the EV stocks as well, and some of that, of course, being fueled right now by the latest news out of the Biden administration, increasing those tariffs and restrictions on imports of Chinese goods in the same space. Let's walk you through the numbers here as we get the closing bells on this Tuesday afternoon, with the Dow Jones Industrial Average posting up about 100 points higher than where it was yesterday. That's good enough for a gain of about 0.3%. Meanwhile, the S&P 500 is going to close right around that 52.46 for Mark. Remember, the all-time high was 52.54 and change set back in late March here. So really just a tick or two away from that tomorrow, should this optimism hold. Up today, 0.5%. The NASDAQ composite up about 0.8% here on the day. And the outperformer was those smaller cap names, as a lot of those meme stocks really sort of fueled a big rally there. The Russell 2000 up 1.2%.
All right, we do talk about the meme stocks a lot, but as you guys said at the top, Romaine, I think you said it, you know, the risk on trade, we are definitely seeing it. I mean, you look at the S&P 500, most names, Scarlett, in the index higher today, 320 to the upside, 183 losing some ground, though.
Yeah, and I've been steadily tracking the industry group movers and how everything's moved towards the green. So that's why the big pie is mostly green. Tech, of course, the biggest sector in the S&P 500, up 0.9%, leading the advanced. Supermicro is the outperformer there. REITs and financials also gaining at least 0.5%. On the downside, you've got industrials, little change, so it's a laggard, but staples and energy stocks finishing in the red.
All right, you know where I'm going to go for my gainers, because I kind of have to. I'm looking at these meme stocks. So GameStop at its highs, up almost 113% today, finishing the day with about a 60% gain. That's after a 74% gain in yesterday's session. So we're talking about, in the last 2 days, up 180%. I mean, I got nothing.
Enough said on that one.
Let's just go to AMC, because the same story, up almost 129% at its highs today, finishing the day with a gain of about 32%. So a little bit of a swing there, and that's on top of an almost 80% gain yesterday. So I don't know what that says. It shows the willingness of investors to play in this market and take some risk in a big way. So fascinating to see that. Here's one more logical, perhaps, on holding. Up at its highs, about 21%, finishing the day with about an 18% gain. Swiss sneaker maker, disclosure, I own them, I like them. Posted strong first quarter revenue. No, I own the sneakers.
Her and Tim, they're cool there.
Posted strong first quarter revenue, nudging its sales forecast higher for the year, boosted by demand for its running shoes and new line of training apparel. So again, up, I'm looking at quarterly sales up about 29% from a year ago, and that was ahead of market expectations. So investors pretty happy, guys.
So it was kind of hard to find some decliners, but I managed to find some. Let's go to the media space. We'll start with Paramount. It went from $13 and change to below $12 to $11.89 after CNBC reported that Sony and Apollo are rethinking their bid for Paramount. That's not to say that a deal can't happen.
Will somebody just do something already?
I know.
So
that's what Sherry Redstone is thinking too. Will someone just do something, please? Apparently, Sony hasn't even signed an NDA, which means that they haven't really begun the due diligence on this. So you can see the stock, finishing down about 5.25%. Netflix, it had fallen as much as 1.3%. It ended up paring some of those losses, but it is still the biggest decline this month, losing about 0.5%. Comcast says it will offer a streaming bundle that includes the Peacock service, Apple TV Plus, and Netflix in order to reduce subscriber churn. No word on pricing. Notable only because it's another streamer that's not doing too well today. And let's end with CVS. The CFO says the company's Aetna insurance unit may lose up to 10% of Medicare members as it tries to boost profitability. How's it going to do that? Well, Aetna will reduce benefits for members, including popular offerings like over-the-counter health products, transportation assistance that had played a big role in attracting seniors to its private Medicare plans.
All right, well, here we go. We see that headline there. NASDAQ ends day at record high, but you're also seeing a bid into the bond market all across the curve, yields moving lower. Simon White is a macro strategist for Bloomberg, and he was saying that the more days when stocks and bonds are positively correlated versus when they're not increases the likelihood that, guess what, guys, bad news is good news, and that dynamic can continue to persist, at least in the near term, and you wonder if we're going to see that dynamic play out tomorrow, guys.
All right, so everything is awesome, everybody. No, it's really not. And I'm going to bring you to this story that is out here from the New York Fed. U.S. household debt has reached a record. More borrowers are struggling to keep up. Overall, U.S. household debt rose to $17.7 trillion. This was a report that they put out today. That's an increase of about $184 billion, or 1.1% from the fourth quarter. Consumers adding, Scarlett, $3.4 trillion in debt since the pandemic, and that increased debt bears much higher interest rates, which we know becomes problematic.
Absolutely. You look at the charts for auto loans or credit cards, and it goes straight up and to the right. Certainly an issue here, especially for the lower income strata of Americans.
Yeah, the only thing is, I hate to sort of do this because I know everyone always says, oh, you have to look at the ratios and everything else. But in that same report, they kind of just basically said, too, that a lot of these numbers are just going back up to kind of what they were pre-pandemic before all that, government stimulus came in and gave everyone that cushion. Now, I don't know if that's a good thing or a bad thing, but at least it's not like, I guess, some extreme level.
But then you also take a look at, say, the NFIB, which surprised to the upside today in a good way, right? So maybe, and that was a worry for the last few months. So maybe some of the cracks maybe we be dissipating a little bit on that end. But
and one thing that I thought was interesting in that NFIB report too was the part of the survey where they basically said they don't plan on raising prices of small businesses. So I mean that should be welcome news to consumers and I guess to the Fed as well.
Yeah, but is anybody cutting prices?
No.
I don't know.
If you know of a place, let me know. Well, it's funny you say that. I'm curious. Have you? I mean, I don't know how much you shop, but have you seen like any significant?
No, I don't
discounts?
shop. People just bring me things. That's how it works in my life.
Gosh,
No, of course I shop. Of course I shop. So, what's your question? Go ahead.
You missed it. I moved on. Do you watch TV, Carol Master?
I watch a fair amount of TV.
All right. There's another story that I've been keeping an eye on.
I actually watch what you're going to go to.
Okay. Can I go there?
Yeah, go.
Okay. Thanks. So one thing is basically 10% of us are just watching YouTube now. How about that? Basically, I thought this was interesting. I mean, it's kind of what we know, right? Is that so much of our viewing habits have shifted to these streaming services, but it's not necessarily the Netflixes and the Paramounts of the world. It's actually YouTube. And I don't know about you, Scarlett. You have any kids around my age. I mean, my son, he only watches YouTube. I mean, he doesn't watch anything else.
I have a theory, which is that all seniors and babies, or maybe young children, watch YouTube. Like they're driving the adoption of YouTube. My parents, who are elderly, they just watch YouTube nonstop at very high volumes, by the way, but like nonstop.
Can I just say, all right, for you, like I have a husband who likes planes, and so he subscribes to very specific niche channels that are like pilots and so on and so forth. I sail, and so we like subscribe to all of these channels of people who are sailing around the world. It's very niche programming, and like you think about really drilling down in terms of topics. That's a lot of what it is. It's kind of interesting and engaging.
Remember
not
we're
just
talking
for
about
old
the hydraulic
people and
presses and the Apple
Ad?
commercial? There's a hydraulic press channel on YouTube.
So here's the thing, though, is that we're going to go, this whole I've been celebrating YouTube, and yes, they got 10% for Nielsen ratings, but you know what got 11.5%? Disney Plus. So we're not like kick that habit. I mean, it's still a Marvel Star Wars world, let's be honest.
And Simpsons.
And Bluey.
Wasn't there a story about somebody bundling today, too? About a bunch of, right? We're going back to bundling in the streaming services. We're going there, Romaine. We're going there.
I thought the cable companies were over. What's happening?
Everything old is new again. Old people and babies, Scarlett.
We love
old people and babies. YouTube.
Blah, blah, blah.
All right. That is a wrap. Our cross-platform. See what Tim missed? He missed a lot today. All right. That's a wrap. Our cross-platform on radio, TV, YouTube, and Bloomberg Originals.
Oh, we are on YouTube.
Yeah, we really are.
That's what led the rating increase, guys.
Beyond the Bell. We'll see you same time, same place tomorrow.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Massar and Tim Stenevec on Bloomberg Radio.
All right, everybody, this is Bloomberg Business Week. Carol Master, Tim Stanovic is off today. He should be back tomorrow, I believe. Cross my fingers. Miss him very much. We do want to get to some news out of the global fintech space today. Ant Group's quarterly earnings falling 19% as the Chinese fintech pioneer founded by Jack Ma struggling to find new drivers of growth following regulatory clampdowns at home. We know the Chinese market very specific, so there's a lot going on. I will say more generally when it comes to growth, AI, digital, crypto, all top of mind when it comes to those in the fintech space and trying to think about how they fuel growth and ongoing innovation. Our next guest has some thoughts on all of it. Stephanie Chu is partner at Portage Ventures, a global fintech platform. They've got over $2 billion in assets under management, and she is joining us from San Francisco with a beautiful backdrop. Steph, hey, good to have you here with us. How are you?
I'm great. Thanks for having me, Carol.
Well, listen,
excited to chat.
Well, we're excited to have you here because I feel like there was, go back a couple of years and all we talked about was fintech and fintech innovation, and I feel like it got a little mellow, but we're back at it. First of all, for our audience, tell us a little bit more about your firm. Fill in kind of the holes and specifically what you guys are up to.
$2.5 billion fintech platform. We've got an early stage fund that focuses on Series A and Series B investing, $5 to $25 million lead checks. We've got a late stage fund as well. And all we do is fintech across payments, banking, wealth management, insurance. So we have been at this for about the last decade. So have seen the rise and fall over the last little while.
All right, so where are we in the cycle and what's interesting? What's kind of really innovation? What is just like, okay, here's a tweak on something that's already out there, but we can do it a little better, and it's just kind of maybe general business, if you will.
The numbers are actually pretty steady. I was looking at them earlier today. We're nowhere near the all-time highs in 2021, where $1 in every $4 was going into fintech. We're now looking at about $7 billion of fintech investing in Q1 of the about $60 billion of venture dollars going into the market. So it's now more like $1 in every $8, but it's been pretty steady the last 4 quarters. We're now kind of close to where we were in 2017 terms, in terms of where the fintech market is. But I think overall, we're still super bullish on the market. Financial services is still a $12.5 trillion industry, of which we're still scratching the surface. Only 2% of the total dollars flowing into financial services actually is flowing through fintechs today. I think we're still in the opening innings, despite being at a kind of plateau in the market for now.
Well, it's interesting too. You know, we were just talking with some very senior members over at Wells Fargo. I do feel like the financial establishment still is very involved in everything and anything in the financial world. Having said that, you guys have a pretty big portfolio. Tell me a little bit about some of the companies and what's kind of interesting, what's new, what do you think is kind of a trend of the future when it comes to this space?
So I think the thing that everybody's talking about right now is AI. I think that will be the biggest pops in the market in terms of valuation, in terms of what investors are looking at right now is AI within financial services. I think the first early use cases that we're seeing across our portfolio, and we have a number of portfolio companies that are spending time in this space, are efficiency use cases. Mm-hmm. So how do you work with large corporates today? I think every board is thinking about the efficiency use case on the cost side, customer service, how to think about coding, how to think about the below the line marketing dollars. I think all of that is very clearly improvements in underwriting, improvements in lending. And I think AI in the financial services arena will start there. I think we're spending a lot of time thinking about how the customer experiences could end up eventually becoming more powerful in this space. We're still very early there. I think we will see the advent of pretty interesting domain-specific models, but again, and agents that will help you actually execute on new experiences. All of that is still to come, but AI is clearly where most large corporates, I think today in the fintech space are focused. I do think in terms of what's new, it's interesting.
Yeah,
Go ahead.
Go there because I feel like, and help me out here, drill down if you will, and be more specific if you can. And just because I feel like you guys are seeing things come across your desk or in your inbox, if you will, in terms of how it really changes our world. Because I think I hear a lot of, we're early on in the inning. I feel like it's a lot of back office. I heard what you said about efficiencies. I feel like it's a lot of mundane tasks that all of a sudden we don't have to deal with anymore because of AI. But how are you thinking about it? Go the innovative route of how things really get disrupted here in the fintech space.
So I think, again, we're still in the early innings. I think let's talk a little bit about the future of commerce. I was just reading a report that more than 50% of payments in e-commerce are now actually done via some kind of digital wallet like a PayPal. I think over time, the way in which we buy and the way in which we search, which is a corollary of fintech, will be completely different. Imagine a world in which your recommendation engine and the way you buy and discover doesn't actually go through separate sites. It's all done in an automated and automatic way through one search engine that allows you to have access to everything in the market. I think that's one vision of what a future agent-led e-commerce experience could look like. I think fraud is another very clear area that's going to be impacted here. There's new fraud vectors that have popped up because of Gen AI, but also I think real-time fraud rails, because now we've got a whole bunch of new real-time rail use cases where you can send money via crypto in an instant and there's no recourse. You've got RTP networks and FedNow networks. There's a whole new set of fraud vectors that have emerged from this. I think because of that real-time nature, we're going to see new advances in fraud models that you will use both Gen AI in the workflow, but also traditional ML in the workflow as well. So these are two areas that we're spending time on that I think will be very impacted by AI going forward.
Wait, and forgive me if I missed this, but did you say also crypto having a role in all of this?
I think crypto, as it relates to like the most obvious crypto use cases in fintech today have been payments, where stablecoin flows are really democratizing and making global payments a very different landscape. It gives access to the emerging markets to US dollar denominated real treasury and yield, which I think which the developing markets have not really had access to date. And so that's an area that we're watching closely as well, because there are and stablecoins and real-time transactions means, unlike our domestic payment rails, in crypto, there is no recourse if you don't have the right recipient. And therefore, there's whole new sets of fraud and payments engines that need to be developed on the front end in order to protect users.
Listen, real quickly, 30 seconds here, because you do have a portfolio of companies. We just talked with the Wells Fargo team in investment banking and markets about private equity having a lot of companies that maybe are going to want to come to market, whether it's IPO. But I am curious, are you looking to do some exits on your companies this year? And again, just got about 25, 30 seconds.
I think we're seeing a lot of interesting private equity exits, particularly take privates in the payment processing space. I think, example, these aren't in our portfolio, but Nuvei, there was also an Advent transaction called MyPOS that happened in the UK. I think we're going to continue to see sponsor-led exits in this market, but I'm most interested in the new wave of potential consumer IPO exits that we're going to see over the next 3 years.
All right, well, really fun to check in with you. Look forward to doing it again in the future. Steph Chu, she's partner at Portage Ventures, global fintech platform, as we said, about $2 billion in assets under management. All right, folks, coming up next, the complicated relationship between the United States, China, and Taiwan. It is all in a new book, and we've got the story that's coming up on Bloomberg Business Week.
It's 4:21 on Wall Street. We do check markets all day long here at Bloomberg. A rally in big tech stocks drove closer to records as bond yields fell. Traders are waiting key inflation data for clues about the Fed's next steps. Next up for Wall Street, the Consumer Price Index, 8:30 a.m. Wall Street time. Complete coverage here on Bloomberg. Count on us for the first word. S&P up 25, up 0.5%. The Dow up 0.3, NASDAQ up 0.8. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Charlie Pellet, we're going to get him a glass of water and make sure he's okay. I'm sure he is, but okay. You are listening and watching Bloomberg Business Week. Carol Masser here in our Bloomberg Interactive Broker studio. A little bit of news I want to first to talk about to set up our first guest. Today, President Joe Biden is hiking tariffs on a wide range of Chinese imports, including semiconductors, batteries, solar cells, and critical minerals, in an election year bid to bolster domestic manufacturing and critical industries. The moves represent Biden's most comprehensive update to the China tariffs first imposed by his predecessor, former President Donald Trump, and a recognition that a hawkish approach to trade with Beijing remains popular with U.S. voters. Still, Biden must strike a careful balance. Additional tariffs risk increasing prices for consumers already hurting from inflation and inspiring the ire of China, which could choose to retaliate in kind. And then there's Taiwan. Today, the U.S. and Taiwan navies conducted joint drills in the Western Pacific in April. This was coming from Reuters reporting that out, citing 4 unidentified people briefed on the matter. This is China's military has ramped up its activities in and around Taiwan over the past few years. As we like to say, I say it a lot, it's complicated. And that's what a new book gets into. Joining us is Salman Khan. He's professor and Dennison Chair in History and International Relations at Tufts University. He's a historian. His new book, The Struggle for Taiwan, A History of America, China, and the Island Caught Between. He joins us right now from Boston. Salman, so great to have you here with us. When we talk about geopolitical concerns right now, yes, we talk about Russia and Ukraine. Yes, we talk about the Middle East, but we also talk about the complicated, increasingly complicated relationship the U.S. has with China, and a big reason is Taiwan. First of all, when you sat down to write this book, what was top of mind for you? Was it to give us all a history lesson? What was it?
Thank you for having me, Carol. There was a lot on my mind. I principally wanted people to understand how we got to this point. I wanted a legislator or an official flying to Taiwan to be able to read the book on the plane and say, okay, I know what's behind all this, because we're now at a point where there are large numbers of ships floating too close to one another, too many planes in the sky. And the U.S. and China seem, to my mind, to be one accident and a bad decision away from something that could go horribly, horribly wrong for all of us. And going through the history shows you both how we got here, but also that there were various ways out along the way. And there are moments that we can look to and learn from, and that might help us better navigate the future.
Well, it's interesting that you say that, and I do wonder, it always feels so delicate, if you will. And I think about going back to when Nancy Pelosi, what was it, the summer of 2022, and took a visit. She was then, U.S. House Speaker, and she went to visit Taipei. That was not a great situation, to say the least.
It was not a great situation, and if you cast your mind back to that, you might remember Hu Xijin, who was the editor of a tabloid, saying her plane should be shot down, which was remarkable. It's not something that you would expect to be said, because usually Beijing has been quite good at controlling the level of vitriol that gets into propaganda. But you think about it, and then you cast your mind back to the Hainan spy plane incident that kicked off George W. Bush's presidency. And you say, a Chinese plane collided with an American plane, but we all managed to walk away from that alive. That was partly because there was an interest in both Beijing and in Washington in getting along and in not going to war. When Pelosi went to Taiwan, the thought that kept going through my mind was, if this goes wrong, do we have that mutual commitment to getting out of it alive still intact? And the answer seemed to be uncertain, which is not something you want to think about when there are two great powers armed with nuclear weapons.
It's interesting. I feel like we have that conversation a lot about, both of us kind of, whether it was the Middle East with Iran and Israel about walking away and saying, wait a minute, the risks of moving forward or escalating are just, it's too much that's at stake. But when you look at what's happening in Taiwan and the US and China, is that willingness to walk away and preserve some calmness, if you will, is that willingness kind of waning, if you will?
I think it's waxing and waning, to be honest. It depends on any given moment. It was heartening to see some commitment with both Joe Biden and Xi Jinping reaching out to one another and saying, can we walk away from this? It was heartening to an extent to see some recognition that, while China might be a competitor, we don't want to go all the way into cataclysm, and some contact with Chinese officials to that effect. What was not heartening, however, was the fact that the waxing happened too. So you mentioned the tariffs just now, you mentioned the possibility of, you mentioned the drills, and it's an election year, and in an election year, everybody vies to get tough on China. One of the things Donald Trump did was to forge a bipartisan consensus around the idea that we needed to get tough on China. And that's something that in an election year will lead to what, to my mind, amounts to a lot of posturing and a lot of dangerous posturing, because the sensitivities in Beijing are such that you don't know when things will go wrong.
Well, there's, getting tough, the United States getting tough on China, right? Maybe through tariffs. And then there's something different, I feel like, when it comes to Taiwan. Is that fair to say that that is a whole other level in terms of what China, how it sees Taiwan and the importance of it?
I think it's certainly a whole other level to Beijing. I think Taiwan is one of those spots that hurts, and that they felt they had a commitment from the United States to a one China principle, that the United States still says we do not challenge that. But if you look at things like trying to bolster Taiwan's diplomatic partnerships, if you look at things like Pelosi's visit to Taiwan and other senior lawmakers' visits to Taiwan, you really do have to wonder, especially if you're sitting in Beijing, how committed is the United States to that principle that's been, in some ways at the core of the relationship between the two countries since Nixon and Kissinger went to China. If that is being challenged, it opens up a can of worms that's just far more sensitive than even a trade dispute would be. And that's one of the reasons this is so dangerous, because I don't think even now there's sufficient understanding within the United States about just what Taiwan means to China. That's not to say that Taiwan shouldn't enjoy the fruits of a democracy it's worked very hard to get to. It just means that some caution and some prudence would be in order.
Why did, it feels like with President Xi, the one country, two systems, policy that seemed to work, it doesn't feel like it does anymore.
So one country, two systems is a fascinating concept, and Deng Xiaoping was actually the person who came up with it.
Right.
And when Deng comes up with it, it's interesting. He actually wants it to work like two systems. He's very explicit about saying, when Hong Kong comes back under one country, two systems, I don't want to tamper with the second system. It's the goose that lays the golden eggs. Why would I change something that's working? And that actually starts off a huge debate in Taiwan at the time. Maybe one country, two systems is the way to go. What changes under Xi Jinping, of course, is that the second system bit gets left out. Hong Kong, if you look at it today, is not a place that it was even 10 years ago, even 20 years ago, when you could commemorate the Tiananmen Square massacre, when you could criticize the government in Beijing, when you can do all sorts of things that, mainland China proper, you probably could not have got away with. That's not the case anymore. So what Xi Jinping has demonstrated is that one country, two systems is a nice concept, but it can change with the people charged with implementing it. And if you're sitting in Taipei and you say, look, we worked really hard to get to a democracy where there have been peaceful transitions of power, one country, two systems doesn't look all that attractive anymore.
It's fascinating. I think about, and my team has heard me talk about this, but like kind of the beginning of my career, it was the whole idea of, Hong Kong being, handed over from Great Britain and the opening of Hong Kong and just, the tremendous opportunities. It was also the beginning, go back a couple decades, of just every global multinational looking at China and figuring out how do we get into this market, and the idea that democracy would kind of change the outcome, if you will, or be embraced in a big way. And it's fascinating to see kind of where we are, or history of just seeing the pullback on Hong Kong specifically, and to see, when we talk about companies in China, we talked about Jack Ma and the changing dynamics, if you will, of running a business out of China makes it very, very difficult for investors. We're going to have to take a break. I want to continue with you, and I want to get a little bit more into kind of how we got here, the history of Taiwan, and just maybe then figure out where we go from here and the importance of it going forward, certainly when we have geopolitical conversations. We're going to continue with Salman Khan. He is professor and Dennison Chair in History and International Relations at Tufts University. His new book out, so relevant to so many of the conversations we're having right now. The title is The Struggle for Taiwan, A History of America, China, and the Island Caught Between. I feel like when we were having our conversation about semiconductors yesterday, it's certainly relevant as well. Quick reminder of how we ended on this Tuesday. S&P 500 just up about 0.5%. The Dow up about 1/3%. And the NASDAQ's a little bit of outperformance there, up about 0.7%. All right, let's get a quick update on world and national news. Off to D.C. we go once again, and Amy Morris. Amy.
All right, thank you, Carol. The cross-examination of Donald Trump's former attorney, Michael Cohen, got off to a combative start as the defense tried to depict Cohen as a publicity hound who's repeatedly disregarded requests by prosecutors to stop talking to the press. The prosecution says Cohen is their last witness, and that could mean that the defense will rest its case, or rather the prosecution will rest its case on Thursday. Trump has brought friends with him to court for support since the trial started. Today, it was House Speaker Mike Johnson speaking out on Donald Trump's behalf to reporters outside the courthouse. A federal judge in Delaware denied a request by Hunter Biden's lawyers to delay his federal gun trial set for next month. Biden's attorneys wanted a delay until this September to give the defense time to line up witnesses and go through evidence handed over by prosecutors. President Biden's son is accused of lying about his drug use in 2018 on a form so he could buy a gun that he kept for about 11 days. President Biden, meanwhile, has formally announced those tariff hikes on Chinese products, especially electric vehicles. The president says these new tariffs will ensure that American workers aren't held back by unfair trade practices.
Price is unfairly low because Chinese companies don't need to worry about a profit because the Chinese government subsidizes them and subsidizes them heavily.
The administration is also looking to exclude some key equipment from the duties altogether to save money for building American factories. A bus carrying farm workers in Central Florida overturned this morning, killing 8 people and injuring about 40 other passengers. Police say the bus was transporting 53 migrant workers when it collided with a truck north of Orlando. Authorities say the bus swerved off a road, crashed through a fence, and ended up on its side in a field. The workers were being transported to a local farm, which has been harvesting watermelons. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
on Bloomberg World Headquarters. I'm Charlie Pellet. We do check markets all day long here at Bloomberg. Turned out to be an up day, very close to records for the Dow, the S&P, and NASDAQ. S&P now at 52.46 ahead of tomorrow morning's CPI report, up 25 today, a gain of 0.5%. Dow Industrials up 126, up by about 0.3%, while NASDAQ up today by 122 points, a gain of 0.7%. A rally in big tech drove stocks closer to records as bond yields fell, with investors awaiting key inflation data for clues about the Fed's next step. So, what about longer-term risks to the U.S. equity market? Michael Riley is co-head of markets at Wells Fargo Corporate and Investment Bank, and he was a guest right here on Bloomberg Business Week.
I think the biggest risk is, and I mean, we saw it, happen, although the market didn't really react the way I would have expected them to react, but geopolitics has been a big issue, and it's quieted down a lot. That doesn't mean it's going to stay quiet. I think my personal opinion is that's the biggest risk, is something that we're not expecting from a geopolitical standpoint and starts to, change the environment out there.
Michael Riley, co-head of markets at Wells Fargo Corporate and Investment Bank. Another big day for a lot of the big meme stocks. We saw the likes of GameStop today, AMC Entertainment, and also Tupperware, all moving higher today, building on Monday's gains. GameStop up 60%, AMC Entertainment up 32%, Tupperware up by 17%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. I want to get back to Suman Khan, professor and chair in history and international relations at Tufts University. He's got a new book out, The Struggle for Taiwan, A History of America, China, and the Island Caught Between. He's still with us from Boston. Suman, how did we get here where Taiwan is caught between the United States and China? And we know that it's a nation that Beijing covets, protects ownership. You see it very clearly. And yet, as you note, it wasn't historically Chinese.
Historically, it starts off being its own weird little way station between East Asia and Southeast Asia in maritime terms. And then the Qing dynasty conquers China along with other parts of the world and conquers Taiwan. That dynasty then loses Taiwan to the Japanese Empire in the War of 1894-5, and Taiwan is ceded to Japan in perpetuity. Perpetuity lasts till the end of World War II, and the United States at the Cairo Declaration says that Taiwan is going to be restored to the Republic of China. Problem with that declaration being there's many different Chinas at the time, including, of course, the communists. And the civil war that erupts between the communists and the nationalists, that would be the nationalists would be the Republic of China, is one that the United States is not sure where it stands on. It wants to wash its hands of the nationalists. And when the nationalists are eventually beaten back to the island of Taiwan, the betting money is sooner or later this too is going to become part of the People's Republic of China. What the nationalists set up on Taiwan is a police state, by the way, that has a whiff of settler colonialism to it. So there's not much sympathy for it, but when the Korean War breaks out, Truman sends the 7th Fleet to the Taiwan Strait, and that begins the separation of the island from the government that is governing China. For much of the next few decades, the United States is going to be stuck trying to choose between two Chinas. And it's only when Henry Kissinger and Richard Nixon decide to make peace with the PRC in 1971 that the United States once again has a modus vivendi with Beijing. But that leaves the fate of Taiwan uncertain because for domestic reasons, the United States feels it cannot come to a definitive handing over, as it were, of Taiwan to the PRC. But the One China principle acknowledges that Chinese on both sides of the Taiwan Strait maintain that there is but one China, that Taiwan is a part of China, and that the United States does not dispute this formulation. That is more or less the situation that attains still normalization of relations between the United States and the PRC, which Jimmy Carter oversees. But that normalization comes with the Taiwan Relations Act, which means that the president is supposed to think about the defense of Taiwan, that being in the interests of the United States, which of course has Beijing howling mad, but that is where we are. And as a result, Taiwan has maintained a separation from China to this day.
Well, it's interesting. So you give that that history, and I feel like it's been a tortured relationship a little bit on the part of U.S. and U.S. politicians about what the U.S. role is, right, in terms of protecting Taiwan.
It remains a tortured relationship. So, if you look at the Taiwan Relations Act and ask, how is this consistent with the One China principle?
Right.
Answer, it doesn't look all that consistent, but one can talk one's way into thinking of it that way. If the United States remains committed to the defense of Taiwan, at some level that is saying we have an interest in what is happening here, and we're willing to tell China what to do about it. So to maintain that that is somehow consistent with the idea that Taiwan is part of China seems to me to be untenable. Why is the United States committed to this? I think there's a whole host of reasons. There is partly credibility. One wants to show China one can be tough. There is domestic political consideration. One doesn't want to appear weak on China before one's constituents. There is, I think among some people now, there is some consideration, and this is probably what should be the argument. If one were going to make an argument, this is why the United States should defend Taiwan. Taiwan did everything right. Despite the United States foisting a police state on it, it made the transition to democracy. So that's an example for us in some ways on how to hand power over peacefully and how to deal with disinformation. And what has been created on that island is something that excites some sympathy.
Well, so what I was thinking as I'm listening to you and I'm thinking, and I've thought about this a lot when we talk about Taiwan, is that what does Taiwan want? And what's its own kind of independent thought in all of this? And I think about it, especially, we spend so much time, as you would imagine, talking about semiconductors, the importance of TSMC, how important it is to the world, the global world of semiconductors. But I do think about, what does Taiwan want in all of this? What can it do independently, if anything?
So I think what Taiwan wants, and you actually saw consensus on this in the elections earlier this year, there doesn't seem to be any rush to unify with China. The three parties that were contesting the election mainly were all pretty much agreed on that. There is a faction that wants to declare independence outright. What's weighing against that, of course, is if one declares independence outright, one is stuck with a situation where that might provoke China into destroying such independence, de facto independence as exists at the moment.
Right.
And there's no guarantee that the United States would do the right thing there. One never knows what the United States will do or not do at a given moment. So I think if you asked, what is the one thing most people in Taiwan are agreed on, it would be, we don't want to jeopardize what we have. How one goes about that is a separate thing. Does it come with a commitment to declaring independence? Maybe some point down the line, if one has prepared one's defenses to the point where they could withstand or at least cost China a lot if there were to be an assault. And one of the things that has sharpened this conversation in Taiwan is what happened in Ukraine. It looked like the reason the United States was willing to commit money to Ukraine and support to Ukraine was the fact that the Ukrainians, against quite a bit of the betting money, stood up for themselves. Would Taiwan be willing to do that? And one of the interesting things about studying the past and studying how wars break out in the past and what people do is you never know till the last moment. There's an element of choice that comes into it. But it is a conversation that's being had over there, and it's a conversation that's being had with increasing intensity.
Just 30 seconds, and I need you to be quick if I may. The driver's seat. Who's in the driver's seat in this triangular relationship? U.S., China, or Taiwan?
Nobody. Everybody has the illusion they're in the driver's seat, but they're all jostling for the steering wheel.
That can cause issues, as we know. I hope we can continue this conversation in the future, because I do feel like this is an important issue, and you're absolutely right with what's going on in Russia, Ukraine right now. Very, very topical and very, very relevant. Congratulations on the book. Suman Khan, professor and Dennison Chair in History and International Relations, at Tufts University. His new book that is out, The Struggle for Taiwan: A History of America, China, and the Island.
company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Oracle shares up today after the information reported that Elon Musk's XAI artificial intelligence startup is near a deal to rent the company's AI servers. Oracle up today by 3.9%. Home Depot's string of negative sales extended into a sixth straight quarter as the big box retailer struggles to overcome a weak housing market and lower demand for some big-ticket items. Joe Feldman is Assistant Director of Research at Telsey Advisory Group.
The sales were definitely a bit softer than expected, and when you look at the U.S., same-store sales were down 3%, which was a little worse than expected. The EPS was a little bit of a beat by 3 cents. However, if you adjust or normalize the tax rate for what we in the street were thinking it was going to be, 9 cents of the earnings came from that. So it was a little bit softer from a quality of earnings perspective, but I do think that expectations were kind of low heading into this print.
Telsey's Joe Feldman. Today, Home Depot down 0.1%. Rival Lowe's down 0.6%. Lowe's, by the way, reports a week from today. Meme stock traders again piling into shares of GameStop and AMC Entertainment Holdings a day after both soared in a revival of the retail frenzy. Today we had shares of GameStop up by 60.1%, AMC up by 32% today. Tupperware also among the big gainers today, up by 17%. Boeing delivered 24 commercial jets in April, its lowest monthly tally since February 2022, as the plane maker slowed production of its workhorse 737 MAX and 737 Dreamliner. Those were our top company stories, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio and Television.
All right, everybody, getting ready to wrap up the Tuesday edition of Bloomberg Business Week. I'm Carol Masser. Joining me in the studio now, Bloomberg Daybreak Asia, Doug Krisner, getting ready for a bunch of hours of programming, a lot of hours.
Can we call this Tariff Tuesday? Do you like that?
Terrible Tuesday?
No, well, you could say that. I said tariff.
I don't like Tuesdays. Tuesdays are hard for me.
Yeah, it's tough. Well, you've been on the road. I mean, you were gone all of last week. You were in L.A., then San Francisco, so you've been on a bit of a whirlwind.
It was kind of fun. You know, it's always good. I love being at home base here in New York City at our headquarters, but it is fun to kind of get out and about, get a different feel of a different part of the country. I mean, Milken is a lot of financial folks, as you know.
Yeah.
There was optimism, but it is interesting. I feel like there's optimism, and yet there's like a hesitation, depending on, I don't know whether it's Fed. They all say, you know, if the Fed goes up a little bit, the Fed goes down a little bit, it's not going to matter. But there's a hesitation. A lot of times it's geopolitics creeping their way back.
I was going to ask about the election. Was that top of mind in a lot of the conversations that you had?
We definitely brought up politics and geopolitics in general. I think there's a feeling that it doesn't necessarily matter too much, although on the regulatory front, potentially, depending on who's in the White House and whether or not we've got, administration that's, deals aren't happening and some different things, a lot of oversight happening. And so whether that could change depending on who wins in November. Yeah. Maybe.
Taxes too, right? Because
taxes too.
What is being labeled the Trump tax cuts, I think they expire in 25. And there was a report last week, I don't know if you saw it, from the CBO.
You were talking about this, yeah.
Yeah, like 4.6 trillion. That would be the net impact, the loss of $4.6 trillion to the U.S. Treasury if those tax cuts are to be extended. That's significant. That's a big number.
I think that's a problem. I think increasingly people much smarter than me think it's a problem too. And you and I have been around a long time, and we've, had those conversations over the years where I feel like every market conversation talked about government, U.S. government debt, right, and the implications. And then I feel like it went away for many years. Right. And maybe in a zero-rate environment or a low-rate environment, it didn't matter as much. But it seems to matter again, and whether or not the cost that is to the U.S. government in servicing that debt, right, paying out on it, and then where you can't allocate money because you've got to deal with that.
It's going to be an election issue. It may be. I mean, the tax cut issue. The other thing, our former colleague, Peter Coy, who was writing today in the New York Times about Social Security benefits, this is probably another topic for the election. And one of the things was interesting because if you look at the comments section, a lot of people are saying, problem solved if you raise the cap, which is, I think, 160,000 right now. Yeah. just to make sure that this is funded so that part of the social safety net is not in jeopardy.
It's funny. I think I talked with you about that. One of the topics that came up on a panel I did that was with investment folks from real estate, from venture, from private equity, private credit, longevity, and the issue that we're living longer and what are the implications for pension obligations. One person bringing up the idea that, you know what, thinking of his elderly parent or older parent that would have maybe benefited by staying in the workplace longer. So I think these are issues we've got to tackle and figure out, right?
Particularly when inflation is as high as it is right now relative to where it's been. For many people, they've not known high inflation. I mean, many people, I'm talking about people much younger than myself, who spent, the last 30 years not having to worry about high inflation. It's like the same thing that's happened in Japan, where you've got an entire generation or two that's completely unfamiliar with inflationary pressures.
Right.
So you're
So then
right. I'm sorry to talk about the CPI print, which is tomorrow.
Oh, there is that.
You're right. So we're going to be talking about that tonight.
We kidded on the TV side. It's like, just rip the Band-Aid off. Let's just get to the report. Let's figure out what it means. The PPI report today was kind of a bit of a mixed bag.
Yeah, but there are certain components of the PPI that show up in the PCE. We know that. In the PCE, yes, it's the Fed's preferred measure, blah, 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 blah.
Favorite child.
But the thing is, it's stubborn. It's stubbornly high right now. And I think the market has to adjust to the distinct possibility that there may be no rate cuts this year, right?
Yeah, I think we need to.
Right.
What a dramatic change from late last year.
Right.
And that's one thing that's changed. Sounds like you'll have some stuff to talk about.
Stuff to talk about.
It's been a long
day. You've been solo.
Tim, when are you coming back?
He's back tomorrow, so you'll be in good hands.
Daybreak Asia coming your way over the next few hours. All right, that's going to do it for me. Thanks for your patience. Balance of Power starts now.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
From Bloomberg's Washington, D.C. studios to our TV and radio audiences worldwide, welcome to Balance of Power. Alongside Joe Matthew, I'm Kaylee Lyons.
President Biden rolls out long-awaited tariffs on some Chinese imports, including EVs, semiconductors, batteries, and solar cells, while keeping the Trump-era tariffs in place. We'll have part of our conversation with U.S. Trade Representative Catherine Tai and reaction today from China trade expert Anna Ashton of Ashton Analytics.
And cross-examination begins for Donald Trump's former fixer, Michael Cohen, in the hush money trial. We'll have analysis from former Watergate prosecutor Nick Ackerman.
As Trump supporters, including the Speaker of the House, Mike Johnson, Governor Doug Burgum, Congressman Byron Donalds, and Vivek Ramaswamy all crowd the courthouse today. We'll have reaction from our political panel. These images, for those of us on Bloomberg TV watching this, are quite remarkable. All matching today at the courthouse, Kaylee, with some real political firepower in lower Manhattan. But we're also watching what's happening today here in Washington with some important news on our relationship with China.
Yeah, news we saw coming, but news nonetheless. President Biden announcing that all tariffs under the Trump administration that were put in place years ago will be staying in terms of Chinese imports, and many of them will actually be raised. The president saying all of this essentially is about leveling the playing field, making sure that it is fair for American workers and manufacturers trying to produce these products. And he spoke about this from the Rose Garden earlier today.
Sometimes they just outright steal through cyber espionage and other means. And it's been well documented and internationally recognized. And when you make tactics like these, you're not competing. It's not competition, it's cheating.
President Biden at the White House earlier today, as you saw and heard live on Bloomberg. We turn now to Bloomberg's Nick Wadhams, who leads our national security coverage here in Washington. Nick, interesting tactic here following visits to Beijing by the Secretary of State, by the Treasury Secretary. The reaction is already a big no from China on this one. What's the administration trying to do with our trade relationship?
Well, there are a couple of competing priorities here. One is the issue of wanting to maintain a relationship with China, but also wanting to correct, as the president says, this imbalance between the fact that, look, China does this a lot. I mean, Chinese tariffs on U.S. goods are sky high, so there's a natural disadvantage there for U.S. goods. But at the same time, a lot of this is pretty symbolic. I mean, you mentioned EVs. China does not really export any EVs into the United States. So I think what you're seeing here more is a signaling attempt to hit China in an area where it sees a large prospect of growth, but also looking to head off what the administration thinks could be coming later on. So listen, we're basically telling you right now, we are closing the door on Chinese EVs. So I don't think you're going to see a huge economic impact in the U.S. from these now, but it's really sending a signal of where the administration is heading and what they don't want to see coming from China in the future.
Well, I guess it's a question of whether China is going to start closing doors in response. This is actually something we asked U.S. Trade Representative Catherine Tai about earlier today on Bloomberg Television, and this is what she told us.
We are interested to see how China responds. We have indicated to China that this is not an intention to escalate or even to confront. It really is on our side a set of defensive measures when taken together with the investments that we are making here in green and clean technology.
Not the intention to escalate, Nick, but certainly China could escalate if it so chooses. We asked Catherine Tai what the worst case scenario is here, essentially, in terms of China's response. She didn't want to speculate as to that. What would it be, though?
I mean, I think when you look at these tariffs, the sky's the limit. You look to President Biden's competition for 2024. Former President Donald Trump has said he wants to put in 60% tariffs on China if he comes into office, and the Bloomberg projection is essentially that would drop Chinese exports to the United States to zero. So, I mean, this could get a lot worse. So I think what you're seeing right now really is much more of a sort of symbolic shot across the bow for the Biden administration.
The White House seems to be bristling today at the idea of this being framed as a trade war. Well, and while China was in the air at the White House today, and certainly the topic of discussion, the Secretary of State was overseas, Antony Blinken, moving from his shuttle diplomacy in the Middle East to Kyiv today as a show of support for Ukraine.
I have come to Ukraine with a message. You are not alone. The United States has been by your side from day one. We are with you today, and we will stay by your side until Ukraine's security, its sovereignty, its ability to choose its own path is guaranteed.
Nick, the money is out the door, the weapons are being sent. Why the visit now? Who's the audience?
I mean, Ukraine is certainly the audience there, as well as Republicans back home. I mean, it's an incredible message from Secretary Blinken. We spent the last 6 months wondering when this money was going to come, and finally they unlocked it, and the administration is essentially privately saying, listen, there is no prospect you guys are going to get any more money at year's end once this $60 billion runs out. So, you know, of course he's going to go and say, we stand by your side, you're not alone. But looming over all of this is essentially this sort of Damocles that's like, we are not going to have a ton more money for you. And you look at what may happen if Trump comes in. I mean, a lot of questions there. I would not be very surprised if